Hey there, fellow finance enthusiasts. Today, I want to discuss Peter Schiff's Great Depression worse than the 1930s coming this year. Are you ready for a dose of truth that'll knock your socks off? Brace yourself, because Peter Schiff is about to drop some knowledge bombs that'll make the Great Depression look like a walk in the park. This financial commentator's predictions are more accurate than a sniper's aim, and he's been shouting from the rooftops about an impending economic storm that'll make the 1930s look like a tea party. So take a deep breath and prepare for an extraordinary journey. The storm is approaching, but with Schiff by our side, we have the strength and knowledge to weather it and emerge triumphant. Are you ready to face this monumental challenge head-on? The choice is yours, and the time is now.
I'm ready! I'm ready! I'm ready! I'm ready!
It's time to discover how low interest rates blow up bubbles faster than a clown, inflating balloon animals at a circus. Are we standing on the precipice of another financial catastrophe? Today, we'll delve into the depths of financial crisis, government jobs, inflation, hyperinflation, dollar dilemmas, and currency chaos. Here's Peter, filled with witty banter and clever ideas. So grab your thinking caps, unleash your financial wit and wisdom, and let the intellectual feast begin. The stage is yours.
Are housing prices in a bubble? Will they collapse? And two, how exposed are the banks?
Well, the banks are very exposed, and anything that was interest rate sensitive is in a bubble, because we had interest rates at zero or practically zero for over 10 years. And so during that period of time, a lot of debt was taken on to buy a lot of assets. And because the interest rates were so low, people buying those assets could overpay. And so it was the low interest rates that helped to inflate the bubbles. That's the same thing that happened in the bubble that popped in 2008. And one of the reasons I was able to see it so clearly before it popped is because I recognized how Fed policy had inflated it.
I couldn't agree more with Peter. He's like a sharpshooter, hitting the bullseye every time, from the 2008 meltdown to the ongoing bubble we've been riding for a decade. It's simply awe-inspiring. The prolonged period of near-zero interest rates has exposed banks and created an environment where interest rate-sensitive assets are vulnerable to a bubble. With low interest rates, borrowers were able to take on excessive debt and drive up asset prices by overpaying. Peter's insight into the pattern of inflating bubbles through monetary policy, as seen in the 2008 crisis, is commendable. I anticipated the subsequent bubble before it burst, but it's surprising how long it took for the current bubble to deflate. This reminds us that economics is unpredictable, even for experts. Get ready for an exciting exploration of financial crisis. The Fed's actions and low interest rates have blown up a massive bubble. It's a thrilling journey full of twists and turns, but together, we'll navigate and conquer it. Let's rewrite the rules and triumph over adversity with style. Get ready for the adventure of a lifetime.
2008, and I think the 2023 financial crisis is going to be a lot worse than the 2008 financial crisis, and it's probably not going to end in 2023. It's probably going to bleed into.
And guess what? It won't magically disappear by 2023. We're in for a wild roller coaster ride, so grab hold of something tight. Peter has some eye-opening insights about the vulnerable state of banks, the brewing troubles in corporate America, and the mind-boggling levels of debt that are weighing us down. Imagine this: corporations playing with borrowed money while we, the people, are drowning in credit card debt, student loans, auto loans, and mortgages. It's a colossal mess, my friends. Let's face it, we can't sugarcoat the truth. Those low interest rates made our payments seem manageable, but now the reckoning is upon us, and it's a hefty bill. Schiff's wake-up call is ringing loud and clear, reminding us that risks are staring us right in the face. But fear not, we hold the power to navigate these choppy waters. Let's arm ourselves with knowledge, explore fresh perspectives, and make wise choices. Together, we can brave the storm, emerging stronger on the other side. Now let's talk about government jobs. Brace yourselves, because there's no reason to throw a party. Expanding government bureaucracies by hiring more people only exacerbates our problems. And who ends up footing the bill? You guessed it, us hard-working taxpayers. We're left shouldering the burden through higher taxes, mounting debt, or even sneaky inflation. Not exactly a fun-filled fiesta, huh? The truth is, government jobs don't bring the same economic benefits as private sector jobs. When private companies create jobs, they sustain them with their own profits. But when the government hires more people, it's like we're picking up the tab without getting much in return. It's high time we reassess this situation, don't you agree? And when recession strikes, things get even trickier. While recessions initially bring deflationary pressure, the government often responds by pumping more money into the system. It's like slapping a Band-Aid on a broken leg. This surplus of money runs the risk of fueling inflation, putting a strain on our hard-earned savings and the stability of the dollar. We must safeguard our money, my friends. So let's keep our eyes wide open and champion responsible economic policies. We deserve long-term stability and a private sector that drives sustainable economic growth. It's time to prioritize our financial well-being and construct a brighter future for all. Together, we have the power to make it happen.
In general, economic downturns end up being inflationary, in that what happens is that you have fewer people productively employed, and so you're not making as much stuff. But as the economy contracts, governments respond to that contraction by pursuing highly inflationary fiscal and monetary policy. They increase government spending, the central banks print more money to buy up government debt.
It's time to outwit the sneaky party crasher, inflation, as it wreaks havoc on our wallets and dances hand in hand with its troublesome pals, recession and mind-boggling price hikes. Economies hit rock bottom, and bam! Inflation bursts onto the scene like a mischievous friend with a fake mustache, raiding the snack table with gusto. But fear not, my savvy comrades, because we've got the power to turn the tables on this financial fiesta. While our government goes wild with spending, we'll tighten our belts and show them who's boss. Social Security, Medicare, and pensions. Yes, they're getting paid, but let's demand some tough choices and protect the value of our hard-earned cash. Get ready for a topsy-turvy world where prices soar higher than a superhero on caffeine. Inflation thinks it can steal our smiles, but we'll outsmart it with wit and humor. We'll regale future generations with tales of gum that cost a fortune, laughing all the way to the bank. Remember, this is not financial advice, but a wild ride through the realms of hilarity. So buckle up, embrace the absurd, and let's triumph over inflation with laughter as our shield. Together, we'll conquer this economic roller coaster and keep our wallets and spirits intact. I've got some news that will make your eyebrows raise and your wallets tremble. The currency crisis is knocking on our door. Get ready for a roller coaster ride that'll make your head spin faster than a whirlwind. The mighty dollar is losing its mojo, and it's time to face the music. Here's the deal. The rest of the world is getting tired of playing nice with the dollar. They're itching to see it take a nosedive, thinking it's payback time for good old America. Once the dollar loses its prized reserve currency status, hold on tight, because prices will skyrocket faster than a rocket on steroids. But guess what? We're not exactly prepared for this storm. Our addiction to imports and those jaw-dropping trade deficits have left us as vulnerable as a hamster in a lion's den. We've been churning out money like there's no tomorrow, and now the world is giving us the cold shoulder. They're less interested in our devalued dollars than a plate of stale cookies. Brace yourself for a shortage of goods and a surplus of worthless cash. Talk about a recipe for economic chaos. And let's talk about inflation, shall we? Japan is already drowning in a 4% inflation rate and partying like it's 1980. But instead of learning from their mistakes, they're celebrating like it's New Year's Eve. And guess what? Europe and the United States are doing the same dance. It's like a global competition to see who can mess up the most. Spoiler alert, we're all winners in this race to the bottom.
Victory screech!
What do you think about this topic? Share your thoughts in the comments section below. Don't forget to like, share, and subscribe to this channel. I'll see you in the next video.